Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Let's check out some of the stories we're tracking for you in the BNN Bloomberg newsroom. Canada-U.S. Trade Minister Dominic LeBlanc says the trade agreement with the U.S. and Mexico should be renewed for 16 years. He made the point in a letter to his counterparts. LeBlanc is in Washington to meet with U.S. Representative Jamieson Greer. Canada's official negotiations over its trade agreement with the U.S. have yet to begin. LeBlanc's letter comes ahead of the agreement's mandatory review. Home sales in Vancouver fell by nearly 4% in May compared to last year. Apartment sales dropped the most, weighing down the overall sales total with a decrease in properties listed compared to last year. Greater Vancouver realtors say there's no obvious near-term catalyst to move the market. Shares of Dollar General are surging in today's trading as it beat analysts' expectations on profit and sales in its first quarter. The company says it was able to raise prices to offset severe winter weather and higher fuel costs. The American discount store also raised its profit and sales forecast for the coming year. It plans to open about 450 stores in the U.S., another 10 in Mexico. A $1 trillion market cap, once a rare milestone. Now, almost like a dime a dozen. The names are stacking up fast as Anthropic officially files for an IPO. Could come in at near $1 trillion valuation. We have to ask, are the valuations justified? Eric Jackson is founder and president of the EMJ Capital. Eric, thanks very much for joining us today.
Good to see you, Roger.
We need a program to keep track of the $1 trillion club. It keeps growing and growing. Is it all realistic? Is it based on solid arguments?
Well, I think it's going to be more than $1 trillion for these newest ones. I mean, the prior highest valued IPO was Saudi Aramco in 2019 at $1.7 trillion. And so now we've got SpaceX ready to come in a couple of weeks. And speculation is they might beat that. Now Anthropic, there's also OpenAI in the queue. So these are stacking up fast. Are they justified? I mean, when you look at the growth rate, I mean, the really stunning thing about Anthropic is that a year ago, they were on a $10 billion revenue run rate. And now they're at $47 billion. And so to 5X in a year is kind of unheard of for a company that scale already. And I think it's all because of Claude Code. It's dramatically kind of taken the momentum away from OpenAI and ChatGPT and put them in the AI driver's seat. So I think it's actually very strategic of them trying to get out first ahead of OpenAI because it's going to make it a tougher comp for OpenAI if they have to follow Anthropic.
Is there money to go around, or are people going to have to start making decisions on this if they want to get involved with any of these ones?
Well, every LLM, including the free ones that you can download from China and places like that, I mean, they all have their strengths and weaknesses. I would say that OpenAI or ChatGPT, I think it's better from a creative point of view, creating logos, writing something more poetic than Claude, which is a little bit more, mechanical. However, I mean, Claude's really improving quickly. I mean, it's changing all the time. But there are differences between each of them. But I do think that that Claude Code especially has really stolen ChatGPT's thunder. So there will be winners and losers. And I think right now Anthropic is positioned well. About 6 months ago, Roger, I used to pay $200 a month or whatever the max rate is for both Anthropic's Claude and ChatGPT every month. And a few months ago, I dropped my ChatGPT subscription down to the $25 a month level because I just wasn't using it anymore compared to Claude Code. And even a week ago, I was thinking, do I even need to pay $25 a month for this for ChatGPT anymore? Or I could go down to the free tier. So if I'm thinking that, I mean, I can't be the only one out there, and that's generally not good for business, especially for a new IPO.
It sounds like there could be a lot of Wild West out ahead for the next little while.
I mean, yeah. I mean, it's for any big, growth market. I mean, 'twas always thus, and always thus will be. But we'll see.
All right. In the $1 trillion club, Micron, your thoughts on how they got there, and are they going to stay there?
Well, I think so because, if you use, Claude Code or ChatGPT, one of the frustrating things is, I mean, these things are still stupid day to day. I mean, they forget everything about you from the next day. You could have the most elaborate, you hear about these stories of people talking to these LLMs like they're therapists, and then the next day they forget. And so obviously that's a memory problem. And that's why these memory stocks are going through the roof, because there's just not enough memory to for Claude or ChatGPT to remember all the intricate details of your personal life or your business life and stuff. And would it be a better experience with that? Yeah. So it is justified. It is why these names have taken off. Now, will they continue at this pace? No, I don't think so. I mean, they might hold these levels for the near term. So I wouldn't be piling in. But I think there are some other names out there that are a little bit lesser known than the memory stocks that will have to be part of the AI data center build out. And then you might want to focus on names like, I own something called Asterolab, which has doubled since March, but I still think it's sort of underknown. Jensen Huang was in Taipei yesterday and was talking up Marvell and saying it's going to be the next $1 trillion company. They're also a chip maker that's part of the build out of the AI data center. So there are some lesser known names like that I think you do well to investigate.
Yeah, I don't think Marvell's lesser known anymore, is it? After those comments, I'm just looking. No. It's up. Well, $60. I'm just trying to do the math on how much. 20%, 20% right now. Let's talk a little bit about one of the old school, Hewlett Packard. They seem to have found their place.
It's really interesting. Obviously, had blowout earnings last night. They're up 30% today. I mean, it's also interesting because this comes on the heels of Dell's great quarter last Thursday night, and then they were up like 40% the next day, and then 10% the day after that. So, and Intel obviously a few weeks ago, just crushing it. And so what it says is that it's not just going to be a kind of a GPU, NVIDIA take-all story. That everybody is upgrading their things like storage, CPUs, all the other parts that are needed within the AI data center, like I was mentioning, with HPE. I mean, just traditional boring servers were up something like 100% year over year for HP. And so I think it's sort of everything else that needs to be built in order to power this sort of AI generation that we're all a part of now. And it's all real revenue. It's not like, I think we can stop talking about circular deals and how it harkens back to the dot-com era and all that. This is just real money being spent on AI.
All right. Last time we chatted, we didn't get to Drake. We wanted to get to Drake. We're talking this time about his new album that's dropped. Iceman has just climbed like crazy. And full disclosure, my brother-in-law is in the video at the arena. I was very excited to see that. What's your take on Drake? Let's hear it.
My take is that he's doing something that no other rapper's done before. He's 15 years into the game, and he's as hot as ever. The Iceman second week numbers dropped like 51%, but that's actually better than any album he's had in terms of a retention level since 2018. And it's just unprecedented. This is going to be a monster album. It already is. And to be 15 years into his career and doing this is really unheard of. The only other person out there doing it is sort of Kanye and Eminem. But you've seen sort of like a drop off with them as they age. Generally, these rappers have 3 to 5 hot years and then they sort of burn out. And so it's great to see from a Toronto perspective, a Canada perspective, especially after 2 years ago when the whole music industry kind of turned its back on him. I've been making these daily videos in the morning talking about sort of the business side of Drake, whether he's going to re-sign with Universal and so forth. And the thing has just gone massively popular. Drake himself started following me. And I think it's because most of the hip hop journalists don't know anything about business. Most business journalists don't tend to kind of delve into hip hop. So I've sort of found a lane in the middle there, Roger, and people are kind of hungry to hear more.
Well, shoot Drake a message, and we'd love to have him on the show.
Right.
You're like this now, right? You're best buds. You're best buds with him.
You're hanging out with him in arenas, Roger. So
no, it wasn't me. My brother-in-law. My brother-in-law Gary now has more views than I do on YouTube. I'm very sad by that. All right, Eric, we got to wrap it up.
Was that the video where he was in the mink coat with the Sleep Country logos on
it? And the guy doing those beautiful lines with the Zamboni, that's my brother-in-law. Westwood Arenas, Chestwood Arenas in Toronto. All right, we got to go there, Eric. Thanks as always, though, for joining us.
Thank you.
Eric Jackson is founder and president of EMJ Capital. Up next, as we were talking about, shares of Marvell Technology are soaring today. We'll find out why with our next guest. Stay with us. Marvell Technology shares are soaring today after NVIDIA's CEO predicted the tech company will be the next business to hit $1 trillion valuation. But NVIDIA also has staked billions of dollars in Marvell. Here to talk about whether the prediction is valid, Felix Wang, Global Technology Sector Head at Hedgeye Risk Management. And thank you very much for joining us, and Felix. And so where are we at? Is this realistic? I think it's worth about $200 billion right now. It's still a long way to go, isn't it?
Great to be here, Roger. Yeah, it's about 237 billion market cap. So 3x, 4x what Jensen said. But look, I'm just curious what kind of gift basket Matt Murphy gave to Jensen for him to invite him on stage together, because this was a surprise. Marvell was going to have their own keynote. Matt Murphy was going to talk about interconnectivity. You know, this is the key bottleneck in data centers, and how Marvell is a key pioneer of this technology. And Jensen just showed up, and and they had a lot of fun. I kept saying to investors, like, this $2 billion investment from NVIDIA cannot be understated. This is critical relationship in terms of trying to understand the next step in the frontier for AI data centers. This is a key relationship for Marvell. And as you can see by the start today, it's soaring.
And I mean, numbers, it's a big number, but it's only about 1% of the valuation of the company. I mean, is that what makes it such a, I mean, is it just the name behind it that makes it such a key investment?
Well, you got to pay attention to every time Jensen opens his mouth and who his friends, partners, people he tout on the supply chain. So for him to step out and say, hey, Marvell is a key partner of us. They are the leader in interconnectivity. If you're looking into the future on how to reduce power consumption, improve density, you got to look at a company like Marvell. I thought it was interesting that he specifically mentioned AWS, right? And AWS and Marvell are very intertwined because Marvell is working on their ASIC chip, and that's one of the ASIC partners for AWS. So for him to directly say, hey, AWS, if you're really serious on being part of the NVIDIA ecosystem through what's known as NVLink Fusion, you got to consider Marvell. So I think that's also gaining some interest among investors today.
And from what you're seeing with Marvell, is it legit? I mean, is what he's saying, can they walk the walk?
I do think so. They are the key enabler of optical interconnect and SiPho tech stack. So what that means is, we're right now, that's the key bottleneck in AI data centers. And CPO, which co-packaged optics, this is a buzzword that's been talked about a lot. And at Computex Taiwan right now, that's what everyone's really focused on. This buzzword means you extend that optical connectivity all the way into the chip package itself by positioning it right next to the compute or switch units. And this is the way forward for meeting the performance requirements. As AI clusters get more and more dense, more and more massive, and the ability to move data efficiently get harder and harder, whether that's within or between data centers. So because of that logic, you got to look at who are the leaders in this area. And Marvell has to be on the top, or close to the top.
And who's the competition for Marvell then?
Broadcom. So Broadcom, Avago, they Marvell is considered a much weaker sister to Avago, and for a variety of reasons. That's why it never gets as much attention as Broadcom and Avago. And look at Avago now; they've surpassed the $1 trillion market cap. But the thing is, it's interesting enough. Even though Marvell may be inferior in some technologies, they still are able to generate more clients. They have Google on the CPU side, maybe on the NPU side. They have Maya with Microsoft. They have AWS on Trainium. So I think they're kind of left out of the picture here, but they are definitely relevant. And that's why I like it. It's our number 2 long, second highest conviction on our long list, just because I think it doesn't get as much respect as Avago. But Avago is also going to go up on these news from Jensen just because, again, people are focused on interconnectivity. That's a key bottleneck right now in AI data centers.
I guess there's no such thing as bad publicity, right?
Definitely. Any publicity from Jensen Huang, even if he coughs in your direction, it's positive.
and I mean, I'm looking at Broadcom's up as well today, so everybody's kind of taking a bit of a lift with this one.
Yeah, but right now, what we've been saying is all boats are lifted. But at some point, if the AI buzz or AI hype, if you say, kind of cools down, then we're going to have to look more into market share shifts. And, NVIDIA, Broadcom, Marvell, they're all interconnected. Arista is another name, Cisco. So these are all part of the networking interconnectivity optics ecosystem. And we think Marvell is a huge market share gainer. But right now, just because of how steep this bottleneck is with interconnects and communication, all boats are lifted.
And any indicators when it might ease that?
So we keep a close eye on 2 things. One is token growth. Token growth from LLMs, as you may have heard, from last night, Jensen keeps saying tokens are now profitable. Well, he's directly mentioning Anthropic because Anthropic was the first one to show a profitable quarter. But what about the rest of the LLM players, right? So we're keeping a close eye on token growth because token growth, a lot of people are saying it can grow exponentially from here as we transition from training to inference. But we have a good read. So when that growth rate steeply decelerates, maybe we're entering into another sort of part of the AI cycle, and maybe we need to take a breather. But we're not there yet, I would say.
All right, we have to wrap it up there, Felix, but thanks as always for joining us.
Absolutely. Great to be on.
Felix Wang, Global Technology Sector Head at Hedgeye Risk Management. Coming up, today's market drivers with Bloomberg's Monique Molina. Time now to take a look at today's market movers, and we are joined by Bloomberg Equities reporter Monique Molina. Monique, thanks as always for joining us. First up, Barrick up on the London listing. What's going on there?
Hi, yes, good morning. So Barrick shares, they've been moving between gains and losses this morning after Reuters reported that the company is looking at listing its African mine assets in London. This could be a standalone listing of the assets, or it could also potentially involve a sale of those assets to Endeavour Mining, Reuters said. And analysts are somewhat mixed on this news. They see it as being potentially positive for Barrick. It aligns with Barrick's focus on shifting towards its North American assets with the potential IPO of that later this year. And it also takes out some of the risk for Barrick. But they note for Endeavour that it does add some of that risk, particularly with the Mali mine, which has had some previous issues in terms of regulations and dealings with the government there. But they do note that this would add more diversification for Endeavour. And analysts are really split on what the price that Barrick could get for these assets are, with some saying as low as $14 billion and some saying as high as $33 billion. So they're really trying to parse out what this would potentially look like for the company moving forward.
Okay, next up, Ecolab rising on its growth guidance.
Yes, so Ecolab, their shares are higher this morning after the water and chemicals company raised its earnings per share growth guidance for the second quarter. They're now expecting to see 9% to 12% growth in their earnings. And they're also expecting to see for the full year up to 15% earnings growth. So this is really what's boosting the shares this morning. Analysts say that this is largely due to the company having better pricing and better costs in this quarter and going ahead. And the company also said that their margins are starting to stabilize and that that's helping them as well.
Okay, and we're going to jump to Obsidian Energy, also having a good day. There's some happiness today.
Yes, so Obsidian Energy, their shares are higher this morning after they said that they expect their capital spend to rise by about $100 million for this year. Well, higher spending isn't always necessarily a good thing. Analysts are actually positive on this news. The higher spending is going to be focused on light oil and waterflood development. And the light oil segment is actually higher returns than some of the company's other segments. So they see this as positive. The company is projecting that this could lead to a 15% growth in production for 2027. And for the waterflood development, they say this will help them increase their acreage, do more exploration, which can also help them long term. So that's why we're seeing the positive moves even as spending is rising.
Okay, Monique, thank you very much for that. Have yourself a great day. Bloomberg's Monique Molima.
Thanks, you too.
Still ahead, a new report warns of Canada's AI risks. We'll dive into that next. Canada-U.S. Trade Minister Dominic LeBlanc says the trade agreement with the U.S. and Mexico should be renewed for 16 years. He made the point in a letter to his counterparts. LeBlanc is in Washington today to meet with U.S. Representative Jamieson Greer. Canada's official negotiations over its trade agreement with the U.S. have yet to begin. LeBlanc's letter comes ahead of the agreement's mandatory review. Home sales in Vancouver in May fell by nearly 4% compared to the same time last year. Condo sales dropped the most, weighing down the overall sales total with a decrease in properties listed compared to last year. Greater Vancouver realtors say there's no obvious near-term catalyst to move the market. Shares in Marvell Technology are surging today, up 26, almost 27%. This comes after NVIDIA's Jensen Huang predicted the semiconductor and networking company will be the next business to hit $1 trillion valuation. That's more than 5 times its current capitalization. NVIDIA took a $2 billion stake in Marvell 3 months ago. And a quick look at the markets. You can see the rebound for the TSX and pushing it up over 35,000 for the first time. It's up 1% right now. So having a good day into record territory, well into record territory. South of the border, it was a bit of a mixed morning, but they seem to be bouncing back. You can see the S&P 500 pushing up again, record territory, up by about 0.2%. The NASDAQ, same situation, up by about a quarter point, and it's above, well above 27,000 right now. Well, the federal government released a draft of its AI strategy yesterday, but a new report today is warning that Canada is at risk of dependency when it comes to other markets if it doesn't address key vulnerabilities in the AI economy. For more on this, we were joined by one of the authors of the report, Curtis McCord, policy analyst at the Canadian Anti-Monopoly Project.
There's a high degree of concentration in the Canadian cloud sector right now, and that concentration is quite possibly going to extend into the kind of emerging AI sector if certain features of the market aren't corrected.
And how do we get around that? I mean, do we have enough room for enough companies to try and spread that out?
Well, the key will be making sure that the government strategy includes competition as a top priority. So in cloud computing, which is infrastructure for holding data and running services and stuff like that, one of the main obstacles to competition, besides the fact that there's just consolidation and economies of scale, is the fact that it's so expensive and cumbersome for businesses and buyers to switch between different providers, which lessens the kind of natural competitive forces of the market. AI is set to kind of extend and deepen those dependencies meaning that businesses or other users won't be able to easily mix and match between different vendors, that they'll become beholden and dependent on specific vendors. And because there's not already a lot of vendors in the space, it's just going to accrue more revenue to those existing giants.
So what do you think the solution is? Do you like go to Samsung and Hynix, or who do you bring in? How? Because I don't see a tech or a chip industry, at least, to backfill that, that side. What are your thoughts on how to pivot here properly?
Yeah, our thoughts is that it doesn't necessarily, the focus doesn't need to be on who is brought in, but the conditions under which they can compete. So what we're advocating here is for an approach that the government should take with procurement, and hopefully some of these benefits extend to the private sector as well, that focuses on interoperability and portability and tries to make the kind of basic infrastructure and resources that computing provides to businesses a kind of commodity, something that's more fungible, that they can get from different providers, and to make sure that for different parts of their business operations, they can choose multiple vendors, that they have the power to move their operations and their workflows between vendors.
And should government be involved in the project itself, or should it just be about regulations from the government?
Well, I think the government is a major buyer of cloud services and is probably going to be a pretty big buyer for AI services as well. So I think the first step is actually building those technical requirements into their procurement contracts and saying that, well, if we're going to be buying these services, they need to work with technology we're already using. They need to work with the existing kind of state of the art in terms of industry standards and things that people already use. And over time, we're hoping that those kind of technologies become more interoperable across providers, that kind of interoperability is available for the private sector as well. Regulation, I think, does play a role, but not necessarily, we don't necessarily need to be minting standards from the top down.
And do you see the Canadian project of AI as kind of an area that is needed for our defense and our intelligence, our own intelligence and privacy from a sovereign standpoint?
I mean, that's a very complicated question, right? Because there's a lot of different kinds of AI. It's going to be applied into a lot of different fields, and the key is making sure that there's flexibility in our ability to choose the best tools from the best vendors, the best in-house, do the best in-house work we need to do, and apply that and find the most effective solutions across all manner of different files. The experts in each of those specific industries, in each of those specific sectors, will probably have better opinions on where it's going to be most valuable to them. But the key is keeping the options open and not becoming dependent on a small set of vendors.
Did your report do any work on the comparative advantages of a Canadian-based solution versus another solution? I mean, we have cheap electricity, we have green electricity, and I know Mark Carney has done a real push in getting the rest of the world to buy green, even when it's priced similar, because it is green. Is there any, have you thought about that as a contextual angle to your recommendations? Yeah,
I mean, there is definitely an angle there. I think in terms of making sure that infrastructure build-outs are done with kind of sustainable power sources, energy use, because as you note, like, some of these projects are extremely energy and water intensive, and they have big impacts on the community. And like right now, the market consolidation is such that the big kind of players are able to kind of almost steamroll with development and get huge installations installed that may or may not be necessary in Canada's case. And it's quite possible that Canadian companies or other interested companies could kind of innovate in that kind of from that kind of sustainability perspective and find more efficient and effective ways of kind of running these operations.
And I mean, for now, 2/3 of cloud computing dominated by the big three, essentially, the big three: Google, Amazon, Microsoft. What do we do with that, and how do we get it to a point where we're not as reliant on them?
As they're experiencing right now in Europe, where they've had the Eurostack initiative running for almost 2 years now. It's not really an easy question to answer. That dependency is at the infrastructure level. So it's very difficult to kind of move business operations, to move workflows and stuff like that. So the key is not necessarily to try and get a clean break right now, but to set the conditions where over time, moving between different providers, mix and matching different vendors and technologies is a lot more technically and organizationally feasible. Because right now, the costs of moving in terms of retraining, in terms of financial costs, paying the egress fees are prohibitively expensive. So that's kind of what we need to address. We need to create the conditions so that that government or other cloud buyers can kind of more easily choose between vendors, and then competition can kind of come in and enter the market. We can have different kinds of smaller, more boutique or specialized firms fit their technologies into a kind of portfolio of assets or a portfolio of operations for a company. And then we have competition based on quality of service, again, instead of just scale and lock-in.
It was Curtis McCord, policy analyst at the Canadian Anti-Monopoly Project, co-hosted by Patrick Horn this morning, principal at Agilith Capital. When we come back, Michaels is betting more shoppers are willing to head back to the stores, but can that strategy drive growth? We'll speak with CEO David Boone after this. At a time when most retailers are doubling down on e-commerce, Michaels is taking a different approach. The traditional craft retailer is expanding into party and celebration categories, as well as testing new in-store experiences, all in an effort to bring customers back into the stores. Joining us now is Michaels CEO David Boone. David, thanks very much for joining us today. Appreciate it.
Great to be here.
You weren't too busy doing something. We managed to drag you away from the store.
Well, I was in the store this morning.
I was hoping you would have made something for me and brought it in.
Next time.
Let's two things you've got going on. There's a lot, but the first up, expansion into the party and celebration categories, and that's, I imagine, with Party City and the impact there, and Joann's. How is that unfolding for you?
Right. So our business, we've essentially refashioned or repurposed the business to be the center of creativity and celebration in every community in North America, and those words are very specific for us. And if you think about our business, we've always been in the creativity business. You started saying arts and crafts. What people don't know is we're also part of the celebration business. We sell a lot of seasonal decor. We help people celebrate the holidays. So it was very natural for us to go into party supplies, helium balloons, and all the related products that help people celebrate life's moments.
And how has that been going? How has the transition?
Been fantastic. So, we've attracted millions of new customers across our chain as a result of the expansion into party and the expansion into fabrics and other crafts as a result of the exit of Joann from the market, particularly in the US, but we're seeing it in Canada as well. And so it's been a really good time for us to have expanded into those markets and serve those customers.
And what were some of the challenges? I mean, one that comes to mind, helium.
Yes.
Can you get helium? But what are some of the real challenges of bringing those two together?
Well, so the big challenge is we needed to go fast. And so as an organization, we moved very quickly to build a party shop by Michaels in every store in North America and a knit and sew shop. And then build up the network and productivity in the supply, in particular in helium. And that was a lot of effort for our organization to set that up. And yes, we have helium, and yes, we can provide balloons, and we've got a great network of suppliers across North America.
And from the expense side, with doing all that and implementing it, how did it come together?
So it's great. We're a business that's owned by Apollo, and they were happy to invest in these opportunities and really drive this business. And certainly consumers responded. So it was a good investment. We added nearly 1 million hours of labor to our stores in 2025. So it's been really a great story for Michaels.
All right. And the other side of this, the DIY, do-yourself, bringing together people into the stores to kind of stay in the stores, isn't it?
Well, there's this amazing trend happening right now, I'd say globally, but certainly in North America, where a trend towards authenticity, hands-on creativity, in-person celebration. Things like, if you look at our website, things like analog crafts, searches are up 130%. Girls' night crafting, it's up 250%. And so what we are doing is leaning into that, not only from an assortment and point of view, but also creating events in our stores. And so every weekend, there's events in our stores. If you were in our stores during the Christmas or the holiday season, you could have come in and painted ornaments and take them down. We're adding services that allow people to personalize things and send them to their loved ones. As an example, a personalized Christmas ornament. So lots of things happening to drive engagement with our customers and lean into that trend.
What is driving that, do you think? Because we were talking about it off air. I saw about film. Young people especially are going out to the theater again.
Yes.
Is it people who have just been 5 years of the pandemic, 6 years ago since the pandemic, and it dragged on? Is it people just want to get out again?
I think there's a bit of that. I also think there's a bit of inundation of screen time. And our studies and our stats would say, particularly young people, something like 50% of them are looking to reduce screen time. Like that's what they're saying they're doing. And looking for outlets, whether it's going to the theater, and in our case, doing hands-on creative crafts. They're looking to get together with friends. They're looking to engage with others in a different way. And there isn't a place that I don't go today, and I say I work for Michaels, I generally don't say what I do, and they tell me about something they have done creatively with friends, whether it's painting a mug or doing an event together. So
it creates the memories. And how are you keeping people coming back? What are you doing to, they've done it once, do they want to do it again? Or how are you?
So certainly one thing we do is we have a pretty strong loyalty and reward program that we've just rolled out across Canada. We have it across North America. So that's just a very mechanical way to connect to our customers. But secondarily is mostly staying on trend. So, we develop 24,000 different products a year and roll them out across our network. And so ensuring that we have the next greatest thing combined with in-store events and services really is the model that's working for Michaels.
And you mentioned people wanting to get away from the screens. Are you still working from the online side too, though? How are you combining that without getting too
far? Well, look, so it's very interesting. Our e-commerce business is growing, quite dramatically. So people are still shopping online, but our store business is growing as well. One of the paradoxes of this kind of analog hobby movement is, although people are craving this in time, a lot of what they're finding and they're discovering online, like in social media. They're following an influencer who has something they create, whether it's a keyboard or how they decorate their house for a party or what they do for their kids' parties or some new version of knitting. There's a lot of discovery online in social media that then drives customers into physical channels.
And do you see expanding? You mentioned at home. Do you see Michaels expanding into maybe at-home parties and things like that?
I think it's in the realm of possibilities. Right now, we're going to focus on updating the store experience, and we're very focused on that.
And partnerships with this, it seems like there's opportunities for that. Are you exploring something like that?
Well, we do partnerships and collaboration. So some interesting ones is we just launched a set of products with a designer. A great collaboration, and his name is Jonathan Adler, and that's allowed us to create new and unique products, both do-it-yourself creative kits, in addition to home decor items. So we do partnerships in that space. You see us do a lot of interesting things in birthday parties. So one of the interesting things is for families, our birthday party business in-store is growing 5x, and that is people wanting to show up, do hands-on crafts with their kids and with their families. And we have tons of partners through Disney, licenses that people are, there's lots of opportunity for Mike.
All right, and with this, what's been the biggest lesson as a CEO of doing this on such a scale? I mean, this is a large scale. It's not one little store you're doing it in. What's been the biggest lesson for you?
The biggest lesson for us as a team has been to be very focused on the customer and very focused around prioritization so we can move fast and serve customers who need to be served.
All right, David, I appreciate you coming in. Thank you very much for joining us.
Great. Thank you,
Cheers.
Roger. Thanks for having me.
All right, that was David Boone, the CEO of Michaels. Coming up next, Trump and Carney are heading to Turkey next month for NATO talks. We'll hear from the Turkish foreign minister on those critical defense spending targets. That's right after the break. Turkish Foreign Minister Hakan Fidan confirming that U.S. President Donald Trump will attend the upcoming NATO summit in Turkey to address alliance defense spending. Canada has officially met the 2% GDP defense spending threshold, while The U.S. continues to press for higher contributions. Bloomberg sat down with the Minister of Foreign Affairs of Turkey for more.
We understand you had a conversation with your Iranian counterpart, Minister Arakci, overnight. I'm just wondering if you could share with us the thoughts on Israel's attack on Lebanon and Hezbollah. What transpired in that conversation?
Well, first of all, thank you very much for having me. It's a great pleasure to be here in Singapore, in your studios. About the question that you asked, yes, late last night I had a phone conversation with my counterpart in Iran, Minister Abbas Arakci. It was about the recent the Israeli attack on Lebanon, because Iran thinks that they had an understanding with the Americans to hold ceasefire on all fronts. So that's why they engage the discussions and on talks. They think that the recent intervention of Israel and the invasion and operations is a clear violation of the ceasefire agreement. I think so it will make it extremely difficult for them to continue with the talks. As a result, as you know, this morning President Trump has, issued a tweet in his statement that he spoke with Prime Minister Netanyahu and the representatives of Hezbollah, and they agreed on to halt the ceasefire. And apparently, Israel has given up from the land operation at the moment. So I think both sides can go back to where they left to continue with the talks. I hope that they can reach an understanding within a few days.
So you're confident and you're optimistic that we could see a ceasefire on Lebanon? Well,
yes or no? Yes, I am confident that the Americans and the Iranians, they are sincere on they want to have a ceasefire. And they want to see the opening of the Strait of Hormuz, sincerely. But I am not sure about the intentions of Israel and possible repercussions of things that they are doing at the moment. So that's why I am cautious. I am confident that the Americans and the Iranians, they really want to have the ceasefire and the opening of the Strait of Hormuz and the continuation of the further discussions, especially on nuclear files and the other related subjects. But as for Israel, they don't have any intention of seeing a stability in the region, so I am not sure about that.
The interim peace deal is on again, off again.
Yeah.
Might you see a scenario where the U.S. gets impatient and decides, you know what, forget about it, and resumes the attack on Iran yet again? Let's
hope that it doesn't happen. Let's hope that it doesn't happen, because last time when it happened, we saw that the global economic impact and because especially on energy security and inflation. I am not only counting the cost of human lives and the destruction of the infrastructure and superstructure in Iran, in the Gulf countries, so and possible escalation of the war into further areas. So let's hope it doesn't happen again. But that's why the mediators and us, Qatar, everybody else, they are doing their best to help the mediators to really reach an understanding and agreement.
We know that Turkey is hosting the NATO summit next month. I'm just wondering if there is any confirmation from President Trump that he will be attending that meeting.
So far, as we know, that he's going to attend.
Has he provided the confirmation?
Well, this is how it goes, because he had phone conversations with President Erdogan over the last month a couple times, and each time he said yes.
Are you concerned that perhaps the tension between the U.S. and NATO might somehow derail the talks?
Talks of NATO-related subjects. No, I don't think that the Americans are very much committed to continuation of the discussions. They might have different ideas on different subjects, but especially the current administration. But it doesn't mean that they don't want to discuss about the NATO-related issues. Of course, they want to.
But there have been indications so far that the U.S. might want to pull itself out of NATO.
Well, those are the political discussions. But in reality, the military, the defense, the Department of War, and the other related government departments, the State departments. I was just with Marco Rubio, Secretary of State, 10 days ago in Sweden. We had NATO foreign ministerial meetings in Sweden, the informal one, and I think we didn't get any kind of indication. When it comes to really the real business, the Americans, both State Department and the Department of War, they are continuing their work to cooperate with the NATO member countries. But as I said, they've been making their points, especially on increasing the defense budget, and they want to see more ownership from the European countries on their security-related issues.
That was Hakan Fidan, Minister of Foreign Affairs for Turkey. Well, Market Call is coming up next. Today on the show, we have Joe Hedgener. He is the CIO and founder of Astrozoa Capital, and we'll be taking your questions on North American equities. Let's take a quick look at the markets and see how they're doing. Bay Street will start off first, and you can see it's on a nice little roll right now, up above 35,000. Slipped a little bit from when we last looked, but still up by nearly a full point, being led by energy, financials, real estate. Going the other way, the drags are in infotech right now is what's dragging it down. And a quick look at the American markets, and then we're going to get to a couple of stocks we want to take a quick boo at here. And you can see the rally continues for the U.S. markets. TSX, or the S&P 500 up by 0.19, NASDAQ by 0.2. Two stocks, Marvell surging and Celestica pretty much on the same news. Jensen Huang, the CEO of NVIDIA, talking good things about Marvell, saying it's going to hit $1 trillion valuation. And both of them are riding that news and up nicely today. And that is it for Morning Markets. Thanks for watching. We'll see you back here tomorrow.